Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 14th of September 2019 and we're providing our gold and silver weekly update for the week ending the 13th of September. And we also highlight why gold and silver prices fell last week to the levels we predicted the week before. Gold fell $18 last week from $1,507 to $1,489, having hit a high of $1,523 and a low of $1,484. In sterling terms, gold finished the week at £1,190, that's down £37. And in euros, it closed at €1,344, that's down €21. Silver fell 74 cents. From $18.18 to $17.44, having hit a high of $18.46 and a low of $17.40. In sterling terms, it closed at £13.95, that's down 86 pence. And in euros, it closed at €15.75, that's down 0.73 euros. The gold to silver ratio rose from 82.9 to 1 to 85.4 to 1. The Dow Jones closed on Friday at 27,219, up 37 points on the day and up 422 points on the week. And the Nasdaq closed at 8,176, down 17 points on the day, but up 73 points on the week. And the S&P 500 closed at 3,007, down 2 points on the day, but up 29 points on the week. So, weekly positive results for the equity markets. The dollar index stands at 98.25. That's down just 0.14 on the week. We ended last week's update with the following words. Quote, "So next week, we are expecting some further pullbacks with gold falling below $1,500 and silver below $18. Later in the week, we reminded subscribers that the previous week update, we had expected silver to fall back close to $17.50, which it has not only achieved this week, but surpassed beneath. So we were a week out, but are comfortable with the prediction. What amuses us, though, is that as we were predicting lower gold and silver prices, and silver falling to below $17.50, others were predicting something very different. A few headlines for you. Quote, "Gold price at $10,000 is not crazy talk, says Frank Holmes." He's from Kitco, by the way. Quote, "David Morgan, currency crisis will easily increase silver's share of financial system by 50 times. Quote, buy now. Silver prices could soar to $50 per ounce. Here's why. David Morgan." Quote, $100,000 silver. Why I'm laughing at the current price. Quote, "Silver prices move higher with no resistance in sight." I think we just had one. And the pumping goes on and on. But interesting, now silver and gold have fallen back, as we stated they would. What's occurring? Yep, you've guessed it. Videos coming out stating why it was inevitable that these prices would fall back. Everyone knew it. You just can't make it up, can you? At least we are bold enough to make weekly predictions and stand by them. And in the main, come pretty darn close to what occurs. Anyway, back to gold for the moment. So what actually happened last week? Well, there were a number of attempts for gold to rally. Firstly on Monday and then again on Thursday. However, a number of factors occurred which really has taken the fear factor out of the geopolitical situation, which to a large extent has been one of the greatest influences on gold and silver prices in recent weeks. The US-China trade dispute appears to be calming down a little, with Trump delaying some of the tariffs due to be applied in October and China doing similarly, hopefully smoothing the way towards a negotiated settlement later in the year. John Bolton, Trump's national security advisor, is no longer in his job. He was either fired or resigned, we care not which, but this eases tensions with Iran and North Korea. We were very concerned about Iran, as insider reports advised us that Bolton was using the recent high seas debacle as an excuse to engage in a military conflict with Iran, and attempting to obtain support from the British to do so. And the Hong Kong situation is easing slightly, though it's still far from over. On the economic front, the European Central Bank on Thursday promised to purchase 20 billion euros worth of bonds from the 1st of November as part of a newly created QE program, thereby reducing the euro's value and strengthening the dollar somewhat. That said, 20 billion euros a month is some 10 billion euros short of the envisaged market expectations of a 30 billion euro monthly bond buying program. And it being delayed to November at least superficially suggests that central banks are not quite as desperate as perhaps certain pumpers would have you believe. Then on Friday, and we asked you to watch out for this last week, on Friday, retail sales figures were stronger than expected, and the Consumer Sentiment Index also rose, thereby to some extent raising a few doubts about what the Fed may do next week. More about that later. Now, from a technical point of view, although short-term momentum has now turned positive because of the fall, medium-term momentum is negative, as the MACD is in the red, suggesting lower prices, as the dollar strength is maintained. Now, silver, like gold, also attempted a few rallies last week, but fell heavily on Friday. It has now fallen to the level we predicted, in fact slightly lower. And the key question is, will silver rebound back to what technical traders regarded as a support level of 1750, or will it fall back to the next support level of $17? Generally speaking, many traders are still bullish silver and have seen this pullback as a temporary situation on its way to $20 an ounce. So let's take a look at what is happening this coming week and then attempt to make an informed decision as to where prices are likely to go. Well, nothing of major consequence is being announced on Monday. So on Tuesday, we have the industrial production figures for August. Wednesday, the Fed FOMC announcement on interest rates and Jerome Powell's press conference. Thursday, the current account deficit for quarter 2 and existing home sales for August, and on Friday, no data actually scheduled. So, although Tuesday is worth noting, the most important day, for the month in fact, is Wednesday. And the question to be answered is, what will the Fed do about interest rates? Well, Wall Street expects the Fed to cut interest rates 2 more times this year in order to stave off an economic slowdown, essentially triggered by the US-China trade war, and then holding borrowing costs steady in 2020. That's Wall Street's expectations. Investors are currently pricing in an 86% chance of a quarter basis point cut on Wednesday. And another 82% believe there could be a third modest cut this year, either during the FOMC committee's meeting in October or in December. Now, whilst we believe the Fed should do nothing on Wednesday, but maintain rates as they are, the inverted yield curve, disappointing non-farm payroll figures, stock market expectations, and Trump's tweets are likely to influence the committee to drop rates by 25 basis points. Now, President Trump has in fact called on the Fed to drop rates to zero and even consider negative interest rates. But we see this as part of his negotiating bullying tactics to at least get 25 or 50 basis point cuts out of them. Now, it's also not the Fed's duty to keep stock markets high, but there is no doubt increasing pressure is exerted upon them not to upset those markets. Our view is that the Fed should wait for another month's worth of economic data before deciding. And whilst there is a small possibility it will do this, you can't discount it completely. It remains just a small one, especially as other central banks have also cut rates, including Turkey and Denmark. Though we advocate the Fed should follow Canada and Australia, who have held their rates this month at 1.75% and 1% respectively. So the key question is what happens to gold and silver prices this coming week? Bottom line, it all depends on Wednesday and the FOMC decision. If it's a zero cut, or 25 basis points, we can expect to see a further weakening in gold and silver prices, perhaps heading towards $1,450 for gold and $17 for silver. If it's a 50-point basis cut, then a resumption of gold and silver's rise will continue, reversing back to 1525 gold and 1825 silver very quickly, and then a continuing gradual rise. This is of course totally discounting any unforeseen geopolitical event which may arise in the interim. We also published a number of quite important videos last week, which, if you haven't already listened to, we strongly suggest that you do, as they put into perspective what has been happening in recent weeks and what could lie ahead. We have placed links to them in the description box below. And finally, we have had a few requests from Inner Sanctum members about annual membership, that is, paying for the whole 12 months in advance. Now, if you wish to do this, as we do not currently have the option on the website at the moment, please send 11 months payment for either bronze or silver, as we will give you 1 month's discount, which is £164.45 for bronze and $328.45 for silver. Then send us an email stating that you have done this to illuminatisilver@gmail.com, which is the same email address for the PayPal payment. And we will then send you a code to enter into the coupon code on the sign-up page. We also have an interesting money drop program on our Discord channel to be launched shortly, where Inner Sanctum members can benefit from a money waterfall, whereby if you are online at the time, you may receive a monetary gift, which could be anything from as low as $10 all the way up to $100. So do make sure that you've joined our Discord channel to take part. More details will be sent later in the month. Meanwhile, have a most pleasant weekend and hopefully a very prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.